I guess we can slowly start. So, yeah, welcome back after a short coffee break. Right now we're gonna begin our panel discussion on centralized versus decentralized financial systems. I'm joined here by Tom and Masa, that are the panel guests. So I really encourage this session to be as interactive as possible. We're going to start really slow from the beginning. I understand that decentralized systems in general are something really hard to grasp. That's why Masa is going to really help us understand them. So as I said, I encourage a lot of questions. Whenever you have a question, you can just stop us. It's kind of an open discussion. I'll try to moderate it to the best of my abilities. So yeah, without further ado, guys, welcome. Thank you very much for being here. So the natural question that comes first when you're hearing about centralized and decentralized financial system would be, what are they?
Perfect, thank you, Christian. I think the major stakeholders when you look at a centralized system is, at the end of the day, the state, either through a central bank or a group of states as is in Europe, who are basically providing the framework of the financial system, where then other participants, like banks, like we as consumers and customers, operate in. And if you look at that, then basically when it comes to trust and to regulation and to how and whether the system might be changed, it is all centralized within one power, all within one place, and in that case, the state or the government, in the sense of the central bank and the regulatory bodies like the BaFin, for instance, that are then the main and major regulators and also, I would say, stakeholders in that system.
So, more or less what we're having right now and we're living in. So, yeah, awesome.
Yeah, I can make a very simple example to make it more tangible for you to understand what is centralized and what is decentralized. Just imagine you have a piece of paper and you have some information on it. You put it on your disk. Or you just make it digital, you write it on a Word document in your laptop. If anything happens to that piece of paper, or if anything happens to your laptop, the information is gone forever. This is centralized, because there is one point of failure, because everything is concentrated in one place. But when it's decentralized, it's like you add this information on a distributed network all around the world. Imagine you add this information in a network of computers in different countries, and if one of these computers goes down or get hacked or anything wrong happens to it, the other computers are still existing. The other parts of the network are still there. So there will be no single point of failure, and it's more secure because you know that whatever that happens, the information is going to be there. So that's basically a really simple example that makes you realize what is the difference between centralized and decentralized. I can go on further. Do you want to go on with the questions?
I think one good question that we can ask the audience now is, how many of you have heard about decentralized finance or about the blockchain, so we can get an idea maybe. So yeah, if you've heard about blockchain and decentralized finance, maybe raise your hand so we can get an idea. I see some hands in the front and some in the back. So I guess this should give us a clear indicator. Yeah, I guess the next question, and kind of follows up from this, is we've built this concept of decentralization. Maybe how does it apply to financial systems? So what does DeFi mean?
Yeah, so when we talk about centralized financial systems, as I said, there's always one point of power. For example, the Federal Reserve in the United States, or the Central Bank of Europe, that we have in Europe. These are centralized financial systems. But when you talk about decentralized financial systems, you're going to have no central power. There will be no CEO. There will be no institution that says, I will set all the rules. I will set all the compliances. Or, for example, regulatory authorities like the SEC, like Securities and Exchange Commission in America, they are considered centralized financial institutions as well. But in decentralized finance, we don't have something like that. Everything is peer-to-peer, everything is just direct from one individual to another individual. And when it comes to validation of transactions, everybody in the network are going to be a part of it. So there will be no Securities and Exchange Commissions who controls There will be all the people, even I can be one of the validators, even you can be one of the validators in the network. So this is how a decentralized finance system is going to work, and we can refer to all the cryptocurrencies, DeFi platforms as an example of a decentralized financial system.
Good. One thing that it's on my mind quite often, and I guess the audience is thinking as well. So we understand that there are some trade-offs between, let's say, transparencies in a decentralized manner, no single point of failure, and then on the other hand, we have the, let's say, more malleable regulatory side of the centralized, because we're having some people that are building the regulations. So do you think that the underlying technology for DeFi, is it, let's say, stable or mature enough to make it? This would be the first question. And the second one, how are these rules going to be written and react to uncertainties?
During the recent years, many developments have happened in the world of DeFi. People are getting more aware about what exactly decentralized finance is. But we are so far away from the mass adoption. There are some challenges in the DeFi industry, which makes it a little hard for everyone, for the retail investors to come in. For example, first of all, decentralized finance is really complex. The concept is not so tangible for people to understand what exactly it is. Moreover, the user interface and the user experience, it's not really that easy. I mean, when you use your bank account application, it's just some clicks and it's really easy for everyone to use, even my grandma can use it. But the DeFi user interface and user experience is still not that perfect for everyone to use it. And we can say that the DeFi platforms that exist right now, they are not completely decentralized. Some of them are a mixture of centralized, decentralized, and it really makes them hard to find a good business model or a good technology model, because they are a multi-spectrum of decentralization and centralization. And the regulations regarding DeFi is really complex, and it's, for example, last year we had the publication of MiCA, which is the abbreviation of markets and crypto assets, and it referred to so many different aspects of cryptocurrencies, but it was not referred to DeFi. So if you go through all the text of the MiCA, you will not find any specific sentence that refers to decentralized finance. So the regulations are a little vague, and that can cause a problem and makes it a little hard for the mass adoption to happen, for everyone to join, and for DeFi to blossom. And there are so many other things. For example, in some countries, we are even not allowed to have cryptocurrencies. For example, India is really reluctant towards cryptocurrencies, and in some other countries, the regulations are different. So this is one of the aspects that need to be to get better. And even though these challenges and issues exist, I'm sure that we are on the right way, and we just need a little more time for the ecosystem of DeFi to evolve and to get better.
Yeah, Tom, maybe some thoughts on the adoption. Do you think, have you interacted with DeFi of any sort?
Well, more so on a private basis, not in a professional environment so far. I think that what Masha would refer to as well is currently there are so many different concepts, ideas when it comes to that, and there's no, even if you were to think about mass adoption, there's no one thing that you can adopt to. People still have a variety of choices to make in a sense. I think if you look at it from a technological perspective, could mass adoption happen? Probably yes. Are these technologies yet in a concept where everybody can adopt them? No. At least in my view. But I think that also gives the opportunity to really figure out what are your expectations towards the next system that is supposed to come after the centralized system. Is it going to be fully decentralized, or is it going to be something 80% there, but you still need a bit of centralization, just either out of convenience and efficiency or for other reasons? And I think that's exactly what is happening right now, where you have several ideas along that spectrum, and we are going to see which is going to be the one that is most sustainable in a way, and covers most of the aspects that we're going to see.
In terms of fraud prevention and, let's say, security, I clearly can understand decentralized is a clear winner, right? Because everything is transparent, you can check everything. I wanted to, and this question is for both, do you think that right now the issues with frauds in the centralized system, are they handled in a good manner? Are they creating a big enough backlash to motivate the whole moving to a decentralized system? And overall, I want to talk about the security and maybe even give examples of security flaws that are and how they're handled.
Yeah, I think regarding fraud, you probably need to differentiate between two types of fraud. One is by like individuals that do financial things, let's say like trying to scam people, and then use that financial system in order to facilitate some sort of payment, for instance. I think that's not going to be really the push factor for the way from centralized to decentralized. The other question, which I think is going to be more relevant, is that, as stated before, for instance, cryptocurrencies in India are basically banned. And there's probably a reason for that, why they don't like that. And then the question is, okay, if there's sufficient, I would say, pressure from the population that they want this more decentralized system or want to be able to adapt to that, that's the type of pressure point rather than, I would say, small-scale fraud that is happening on individual level. It's more so the question of broader, I wouldn't call it fraud, but authority that is probably going to drive it.
I can continue.
Yeah.
So in the centralized financial systems, the regulatory authorities usually have some kind of rules and regulations to control fraud and security, for example, AML, anti-money laundering, or KYC, know your customer. But in decentralized finance, our approach is going to be different. For example, one of the ways that we try to keep the transactions legit is consensus mechanisms. Consensus mechanisms are a set of rules and smart contracts that you can use to keep the network legit and honest. For example, we have proof of work and proof of stake. Like when you do staking, you're actually trying to involve in the process of validating the transaction. So you're trying to check whether this person is actually acting towards the benefit of the whole network or not. So the way that the centralized financial systems and the decentralized financial systems deal with fraud and security is a bit different.
Good. I guess this would be a good moment to just do a, let's say, look over the audience. Are there any questions so far? Is everything clear? Yeah, come.
So you had mentioned that there is a case in which you can have both a mixture of the centralized and decentralized aspects when it comes to a financial system. How would this look like, and how does, let's say, centralized entities like the government or central banks play a role when it comes to decentralized financial systems? And yeah, how does this interplay look like?
We have a concept called CeDeFi. CeDeFi is the abbreviation of Centralized and Decentralized Finance. And I think this is the ultimate way, this is the ultimate goal that we are looking forward to achieve, because centralized financial systems are not going to go away, and we don't want them to go away. We want to find a situation in which decentralized financial systems and centralized financial systems can somehow coexist and use each other's positive aspects. And I think when centralized institutions like central banks and authorities use the technology of blockchain, use this decentralization, they will open doors for innovation. It will even be good for them, for their own ecosystem. And we gotta try to find some synergies between the DeFi and CeFi, but it has not happened yet. But it would be great if the authorities, especially the people who are working in the regulation aspects of centralized finance, will work closely with the people in decentralized finance so that we find more synergies and we find some solutions to work together. But I'm sure that the future that we have ahead of us is not going to be completely decentralized. It will be more a mixture of centralized, decentralized.
Yeah, I guess in this, as a follow-up question, of course, if there's any more question from the audience, I can take that. If not, a follow-up question that actually would go to Tom is, I know some companies, for example, in automotives, or I know for automotives, BMW at least, I've heard that they're already trying to integrate some internal, let's say, blockchain ecosystems into their work, such that they can leverage exactly this sort of like validation mechanisms. Do you think this has the potential to be applied in investment banking? Do you think fraud in investment banking, especially merger and acquisition, would benefit from this sort of validation?
I think it would. And I think, at least to my knowledge, for instance, you look at auditing financial statements, for instance. That is a process that, to my knowledge, there are some ideas how technology can be used in order to ensure that validation is correct, which is, by the way, probably the single most important point when it comes to fraud and mergers and acquisitions, because financial statements are what everything is based on in that space, and if those are fraudulent, then of course you have a major issue at hand. So I think that could be an application where within investment banking that is relevant. But I think, as you say, there is a sort of a distinction where the technology can be used in other cases as well outside of finance. So if you look at BMW and the validation system there, and I think that holds to be true for other sectors, and which makes it especially interesting to move further into this decentralized finance topic, because it not only benefits the topic at hand, finance, but could also benefit adjacent topics, and there's a lot of room to basically improve validation and other technologies as well.
So I guess there should be overall an attitude toward decentralization in general that should be encouraged, not necessarily specifically in finance, but in finance as well, there will be a lot of benefits.
Yeah, I think so.
The next question that I actually prepared was in terms of financial inclusion. So as Masa already stated, bank accounts, for example, right now with online banking, everything is really easy. You just download the app, you download Sparkasse, you go there, and you have everything. In DeFi, I know that the UI or the experience is a bit harder. So how do you think, when we're going to do this transition slowly, how is the financial inclusion going to be affected? How are some countries going to be affected by it? So a bit on this.
Financial inclusion means creating opportunities for less privileged people to have access to some financial assets like credits, insurance, to have this opportunity to invest. There are so many people all around the world who don't have the opportunity to even have a bank account. There are so many countries who are under sanctions. They are not allowed to have a bank account. For example, in Africa, there are some people who don't even have an identity, anything like a passport or identity card to prove their identity. And when you want to open a bank account, they want to do KYC, know your customer. And so when you don't have an identity, you cannot go through the process of opening a bank account. So decentralized finance is really moving towards empowering inclusive finance. So they are the people and the atmosphere in decentralized finance is providing some products which is really inclusive. It will be really easy for anyone. I mean, even if you are in Africa, you just need internet connection. Then you can open a DeFi account on a DeFi platform. You can open a wallet, a cryptocurrency wallet. So I think regarding inclusion finance, inclusive finance, decentralized finance is far ahead of centralized finance.
Yeah, I would agree to that. And I think it's also mainly driven by the fact that if you look at how inclusion works in the centralized financial system, at least the one that is currently in place, is basically not technological at all. It is pretty much paper-based, if you want to say so. And exactly what has just been said, it's, if you're able to basically bridge that gap, in the sense that even if you don't have all this proof that you would need for a traditional bank account, you can now access basically the whole ecosystem if you want so. It is much more inclusive compared to what we currently have, and I think from looking at it from the other perspective, it's also not possible to imitate that on a centralized system. It's not going to be as easy as on the decentralized system.
Now that we're on this topic, it follows rather naturally. How do you think, so in India, cryptocurrencies are forbidden, and one good question would be why, if you know, and that would be the first question. So do you have idea about that, or?
Not really.
Okay, and then the second thing that I was thinking, so right now in the world we're having a lot of conflicts and there's a lot of geopolitical things going around. How do you think is this going to affect the adoption, or how does the, let's say, geopolitical dynamics of the world would influence this system? So we know, for example, that in a centralized manner you can just ban some customers or not offer some customers some opportunities just because their country does something. So the discussion is, do you think it would be better in terms of geopolitical dynamics or worse? Or Yeah.
I think the question of better or worse probably depends on your perspective. Better in terms of transparency and freedom, yes, because there's no central authority that can, as you say, limit access for some people to that system, which I think can be desirable, and I think it's also what can drive the DeFi idea in general, is that there should be one single authority that can limit or impact the system at large, uniquely, I would say.
Yeah, as I mentioned before, the regulations in different areas of the world are so different, so we really need to move forward this direction that the geopolitical situation shouldn't have any kind of effect on these decentralized systems that we have, because when the regulations in one part of the world are different from the other part of the world, then it would be really hard to move forward in that adoption and to get better in the system. And it can actually be beneficial to use decentralized finances in different geopolitical crises. For example, when there was like the war in Ukraine, some people used cryptocurrencies to send help because it was probably impossible to use the bank accounts. So I think all the people who are in the regulatory authorities, they need to educate themselves more about the decentralized finance so that we can have better regulations.
So as we're slowly coming to the end of the discussion, I don't see the audience having, oh, we have questions, great. Yes.
Okay, so you said that, so you said that they use cryptocurrencies to send help, I mean financial help. Okay, that's great, but you can also use it for like bad purposes, for example, with the current situations in like Gaza, for example, the terrorist organization bought like millions of worth of weapons using Bitcoin, so they cannot get traced. I mean, there are some drawbacks, and I think it's too soon to like give opportunity to like countries and all that that's just cannot get along with it.
So maybe, yeah.
Yeah, but you gotta consider that fraud exists in all industries, it's not just cryptocurrencies. Because everybody and the news are so concentrated on cryptocurrencies, when any kind of negative news comes up, everybody are like, oh yeah, did you see that? Cryptocurrencies are used for terrorism and so on. But the thing is, if you go deep into the centralized financial systems, you might see corruption, you might see a lot of different bad things that are going on in the background, and it happens in all industries for sure. You can use the technology for good things or for bad things, but it doesn't mean that just because there are some bad people who are using it for bad things, we have to stop evolving this technology, because the good things about it are so much more than the bad things about it.
Yeah, I would definitely agree to that, because also in a centralized system, and this is what I meant earlier, individual people can always do financial things, and I mean, evading sanctions and funding illicit activities also happens within the centralized system, and probably if you look at the number at a much more scale, just given that the centralized system is so much bigger. I think the question there is more a general question: how do you avoid that from happening in either systems, and not necessarily saying that one system benefits the activity of doing that compared to the other.
I saw a question there. Yeah.
I have a question on decentralized systems. Earlier you brought up the example of sharing the Word document online from different networks. And as far as I understand, what happens if one person or a group owns majority of the network, which is more than 50%? Is it possible that they manipulate the transactions?
Well, the 51% attack has been mentioned a lot as one of the issues in the decentralized finance, but the chances that it happens is not really high, because when you focus on the consensus mechanisms and the validations, then everything will move towards the legitimacy of the network. So the chances that the 51% attack happens is really low.
Good. So I do think overall the conclusion from the discussion was that what we're actually pushing for is rather a mix than a replacement entirely. And then one question that comes to mind, and this would be my last one, and then we can take more questions from the audience if there are any, is regarding these currencies. So generally when you think about DeFi or blockchain, you think about cryptocurrencies, Bitcoin, Ethereum. When you think about the governments, well, of course, you think about, I don't know, dollars, so the fiat currency. Do you think in this mixture that we would desire, what would be the currency? And if we would say we will replace entirely one with another, or there's going to be some sort of dependability. So as crypto right now is based on the fiat. So yeah.
I think instead of focusing on the currency, cryptocurrencies, and what would be the best currency and so on, you should focus on the technology, because cryptocurrencies are just a small fraction of the use cases of the blockchain technology. And if we just focus on how blockchain can be used in different industries, in supply chain, and like real estate and other industries, then we will move forward to the mass adoption. But honestly, personally, I think we don't really need to have a lot of currencies. Like every now and then you hear a new project here, a new project there, and they all want to have a new token and so on. And many of them don't actually need a coin. And there is a new concept like this digital euro, and I'm really skeptical about that one as well, because when you try to connect like the centralized authorities and the cryptocurrencies, it's a little vague, because we are trying to get away from the centralized authorities when we are moving towards decentralization. But in general, I think if you want to learn more about blockchain, or if you want to get involved in the blockchain industry, just focus on the technology, because it's not just about cryptocurrencies.
Yeah, I think that being said, if you look at is the currency going to be one currency? Probably not. Is it already there? Also probably not, because as stated earlier, they are still all trying to solve different things. So the one for all solution is probably not there. That probably is also never going to be there. I think there's always going to be a case to be made for individual currencies if you were to look at different use cases, for instance. But moving away from that, of course, the technology itself, separated from the currency, needs to be further advanced. And I think we are going to see that, as you said, they are also moving beyond currency for other use cases. Let's say validation for BMW is I think a great example, and is still going to be the case. So I think it's not going to be a one-for-all solution.
Yeah. Good. This is actually like a really nice, let's say, ending message. Focus on the technology, not on the buzzword. And especially for us students, personally, I've been hearing a lot of hype just around making money out of crypto, rather than, hey, can we actually understand the blockchain and create something valuable out of it? So yeah, then with this being said, we have time for one or two questions from the audience, if there are any. If not, I would thank you very much for the discussion. I think it was really insightful and really reasonable at the end of the day. So yeah, now we're gonna move on to the next keynote speech. That's gonna be a presentation on fintech. So it's gonna take 1-2 minutes for the setup. But yeah, with that being said, thank you very much, and yeah, we'll move on.